Hello and welcome to a public forum with the Governmental Accounting Standards Board and a number of participants. Welcome everybody. Today is September 9th, 2025, and we are here to have a public forum on our project related to the preliminary views entitled Severe Financial Stress and Probable Dissolution Disclosures. We've had two of these so far. One was all in person, one was all virtual. This one is a little mix of some of us are here in Norwalk and some are here with us virtually, so a hybrid public forum, but we're looking forward to it. We really appreciate all of you agreeing to participate. This is an important project. We've got a lot of good discussions so far, and we look forward to today's discussions and hearing all of your views about the project before we move forward with it. So we know you're very busy. You have plenty of things to do. We appreciate you being willing to share some of your time with us in the next 3 hours or so to talk about your views on this project. So thank you very much. We'll start with kind of introductions, and I'm going to start with the participants, kind of the non-board people, and we're going to, because we're all kind of mixed up, we're going to just use at least, I don't know how many people have it, but at least the list of participants I have, which is, I think, alphabetical order by last name. So if you don't mind, introduce yourself and kind of who you're representing or where you're from, that would be great. And then after we go through the participants, we'll go through us at the GASB so that everybody has context of who all is here. And so first off, then it's Bill.
Yes, thank you, Joel. Bill Blend, currently a managing director with Forvis Mazars. However, I'm participating today as an individual, trying to provide my 30 years of government accounting and auditing experience to the board.
Thanks, Bill. Tony.
Hello, everyone. My name is Tony Boris. I'm a partner with Crow. I'm here representing the AICPA State and Local Government Expert Panel, which I currently serve as the chair.
Thanks, Tony. Zach.
Thanks, Joel. Zach Borgerding. I'm a deputy auditor with the Virginia Auditor of Public Accounts, and I'm here representing that organization.
Thanks, Zach. Alicia.
Hi, I'm Alicia Gamble, and I'm representing the GFOA Accounting and Auditing and Financial Reporting Vice Chair. I do want to give a disclaimer because the committee did not address any of these questions. I will be answering based on my personal opinions. However, I can say that I have no reason to believe that the organization would disagree with my opinions.
Thank you. Bruce.
Hi, good afternoon. My name is Bruce McDonald. I'm a professor of public budgeting and finance and the director of the School of Public Service at Old Dominion University. And I'm also the co-editor of the Public Finance Journal.
Thanks, Bruce. Heather.
Thank you. Hi, everyone. My name's Heather Plitt. I'm here today representing CLA. I'm a director at CLA serving our state and local government clients, and happy to be here today. Thank you.
Thanks, Heather. And it just so happens last on the list alphabetically, but not least, is our one that's here in person, Elizabeth.
Hi, good morning. I'm Elizabeth Thomas. I'm a partner with Butler Snow Attorneys. I'm a public finance attorney. Not representing NABL, but these are my own comments today.
Thanks, Elizabeth. And thanks again, everybody. Really appreciate you spending time with us. And look forward to the conversation on our side. I'm going to go in order of the list that we have here, which isn't, I guess, is kind of alphabetical after you get past a couple people. But anyway, I'm first, Joel Black. I'm the chair of the GASB, and Jeff is next on the list.
Hi, Jeff Praviti. I'm vice chair of GASB.
And Chris Knight is next. He's a board member with the GASB, and Chris is outside the room right now, but he will be in shortly, so you'll probably hear from him, but he won't have a chance to introduce himself. Diane.
Diane Ray, I am a GASB member.
Stan. Jackie.
Good afternoon. I'm Jackie Reck. I am a GASB member.
Thanks, Jackie. Robert.
Robert Scott, GASB member.
Thanks, Robert. Carolyn.
Good afternoon, Carolyn Smith, GASB member.
Thanks, Carolyn. Alan.
Good afternoon. Alan Skelton, GASB director.
I'm going to bypass Deborah's next on the list because I'm going to turn it to her right in just a second. But Roberta.
Roberta Reese, project staff.
Thanks, Roberta. Christian.
Good afternoon, Christian Schabowski, GASB staff.
Thanks, Christian. And now, without further ado, the person who will talk more, and I will be quiet now and listen and only ask questions, is our moderator and the project leader for this project, Deborah. Deborah, please take it.
All right. Good afternoon. Thank you. I'm Deborah Beams. I'm GASB staff and the moderator for today's forum because I am the lead project manager on this particular project. Our objective over the next 3 hours is to hear your responses to questions that were posed, questions about the proposals in the preliminary views or PV. Each of you will have an opportunity to answer each question. So for each question, we will start with a participant, and then we will go through in alphabetical order, sometimes down the alphabet, sometimes up the alphabet. And I'll call on everybody when it's their turn to speak. So we hope that you will answer every question, but if you wish to pass, you may do so. If you want to echo what somebody has previously said, you can do that as well. If you do want to echo, please be mindful and specific about whose comments you are echoing. Sometimes we've heard multiple different types of comments, and so that helps us to know what you have agreed with us with on something. After we've gone around and everybody has had a chance to answer each question, we will open it up for discussion. At that time, if you passed and wish to answer, you may. You can ask follow-up questions or comments based on what you've heard. The board members also will have a chance to ask questions as well during that time. To do that, please make sure to use the raise hand feature in Zoom. For those of you that are joining us virtually, that's how we'll know that you wish to speak. For those in the room, you can just turn your name tag up like we often do. For those of you virtually, unless you're speaking, please stay on mute. That will help us to cut out any background noise that might occur. We will take a short break about halfway through this forum, but if you do need to step away at another time, feel free to do so. We just ask that you wait until you have answered the current question before stepping away. Are there any questions before we begin? All right, seeing none, we will get started. The first topic is the relationship between severe financial stress and probable dissolution. So Chapter 2 of the preliminary views describes the proposed separation of disclosure requirements related to financial stress and continued existence. Statement 56 contains the current guidance on going concern uncertainty, which includes elements of both continued existence and financial stress. So for the sake of clarity, the board decided to use terms other than going concern to describe these two ideas. Severe financial stress is a current condition, whereas probable dissolution is a likelihood of a future event occurring. And that likelihood may or may not be the result of financial stress. So question 1 for discussion is, do you agree with separating financial stress and continued existence for note disclosure requirements and eliminating the term going concern? Why or why not? And we are going to go in complete alphabetical order this time, which means we are starting with Bill.
Good afternoon. Thanks again. I agree with this. As a matter of fact, I would just like to share at my previous firm a specific example where this would be relevant. We had a transportation authority which we were auditing, and there was significant conflict from a political standpoint as to who was going to have control of the entity. However, there was no issue whatsoever related to its financial capabilities or continuance as an operation. And as the auditor on that engagement, we struggled with it because the entity, the legal entity, was certainly going to go away or certainly going to be significantly impacted. And putting it under the going concern and some of the connotation associated with that was very alarming to us. And we, quite frankly, in my opinion, we had to way over disclose. We had to way over reach out to the market to make sure that the bondholders weren't going to be upset with reading in the financial statements that there was a going concern. And so I'm certainly supportive of this and think it's relevant in the government environment.
Thank you, Bill. Next is Tony.
Thank you, Deborah. Appreciate it. I did want to preface that our comment letter was prepared by the members of the expert panel, along with members of the Accounting Standards Board, Going Concern Task Force, and also members of the AICPA Technical Issues Committee. So a joint letter, let's say, which we have not typically done in the past. So our overarching response to this is, while we support the board's efforts to further clarify and improve existing GASB guidance on going concern uncertainties, we wholeheartedly disagree with eliminating the concept of going concern. We feel losing the long-standing going concern framework may reduce clarity and comparability with U.S. Generally accepted auditing standards and other frameworks. Removing going concern risks misalignment with statutes and regulations where the term is embedded, and I'll touch on that more in a second. I think our overarching comment or belief, I think, is going to be embedded in a lot of my responses today, is we believe going concern encompasses both the concepts of severe financial stress and probable dissolution. So not only whether an entity will cease to exist, but we also believe the substantial doubt exists when there are conditions and events that, when considered in the aggregate, indicated as probable the entity will be unable to meet its obligations as they become due. So the lack of alignment with other standards, we believe that the preliminary views expressed in this document could make it an outlier among U.S. accounting and auditing standard setters, all of whom rely on the well-established going concern concept. We believe using different terminology for similar economic events may confuse stakeholders. Regarding the potential public interest concerns, stakeholders expect accounting and auditing standards to be interoperable with common definitions and complementary requirements. Going concern is embedded in various U.S. federal and state statutes and regulations. For example, for our federal grant compliance testing as part of the single audit, grant recipients are considered to be low-risk auditees. It's a criteria that they are considered to be low-risk auditees. Moving away from that terminology could create legal and regulatory inconsistencies and unintended consequences. Therefore, we recommend that we maintain the established going concern framework while incorporating severe financial stress and probable dissolution concepts into it. This would include updating the definition of going concern and using SFS and PD as criteria indicators within the going concern definition. This would avoid confusion, preserves the alignment across all financial reporting ecosystem, and reduces the need for widespread regulatory changes.
Thank you, Tony. Next is Zach.
Thank you. First, just want to thank the board for your continued commitment to due process. Always appreciate the opportunity to participate in these. And so I would start off by saying that I understand, or based on the written views, why the board is doing this. And I understand that there's a real issue that you're trying to address. I would echo a lot of the same concepts that Tony just went through in terms of having significant concerns and moving away from the going concern framework. I think that's a foundational concept that is kind of universally accepted at this point by all domestic and international accounting and auditing standards. I do think that at least running with how the current views are would create a disconnect and inoperability with auditing standards. So there would have to be some kind of an understanding there to make those two congruent. I believe that this is one more thing that would make state and local governments different than the private sector. And so In my opinion, we only want those differences where government needs to be different. And so that is another aspect to consider. Also looked at uniform grant guidance has as kind of one of its triggers for high-risk subrecipients, whether or not an institution is a going concern. And so this would, that gives them kind of a lever or a trigger that they can use to make that assessment. That would be more difficult under this current framework. And then kind of my last point here is just that, and I think maybe Tony made this point, but that is there an opportunity to do some of the things that these views are trying to do within the current framework of using the going concern without completely deviating from that, creating completely new terms. So that is my position on that question.
Thanks, Zach. Next is Alicia.
Thank you. I actually agree, because if you compare this to compare it to the private sector, governments rarely dissolve, and the traditional business concepts do not reflect the realities of the public sector operations. So I believe this approach provides clearer, more relevant information to citizens and stakeholders while ensuring financial stress is taken seriously. I do, however, feel that there may be some confusion between the going concern and this one. So there will need to be some clarity between the two, or will one be eliminated? So that's my answer.
Thanks. Thank you, Alicia. Bruce?
Hi, so thinking about the question, I kind of have two different sets of responses. The one side is for the work that I do engaging with the community practice. So city council, county commissioners, members in the community who are attending, hearings, explaining going concern is something that's relatively easy because they do have that context of understanding what it is, likely from either their personal life or from some other, business accounting perspective they might have. But thinking of the separate, terminology, especially when you put probable dissolution, I can imagine sitting in any kind of city council meeting when you're talking about the finances and they're looking at that term and you're going to cause a little bit of panic and chaos because you're trying to kind of calm everybody down and explain what that means unnecessarily. We also have the fact that very few governments ever enter into a dissolution. So, if you're going to separate them into two different terms, probable dissolution is probably not the best term to use because more often than not, you're having an emergency manager come in and take over and help get them back into a strong financial position. And so, I think separating the terms out in the way that you have it probably creates a little bit more chaos than you're wanting to actually create in those hearings, in those meetings where the documentation is being used by the members of the public who are there. At the same time, I definitely can kind of understand why you want to separate them out. So I don't think, it's almost kind of one of those situations where if you do end up separating it out, you might want to have a better grasp of the terminology that's being used. But as several of the members have said, thinking back to, specifically what Tony mentioned and what Zach mentioned of wanting to stay consistent with what's coming out, what's being used by other organizations, by other industries, that becomes very important. So if we consider the business sector, uses going concern, the nonprofits always use going concern. IFRS, the international system, is very going concern basis. So what this would essentially do is create a opportunity that here's one more thing that's different. Here's one more thing that we're kind of distinguishing between governments and their finances and everybody else. And what are we actually getting in return, or what extra benefit is there going to be by adding that there? And I'm not really sure there's enough that's being added to the discussion by separating that out for people and removing that terminology. Thank you.
Thanks, Bruce. Heather?
Thank you, Deborah. First, I wanted to thank the board and the GASB staff for tackling this topic. I know it's an important topic, and we very much appreciate the work you've done to try to make our disclosures better and more useful. That being said, I wanted to start off by agreeing with points that Tony and I believe Zach brought up about the interoperability between this proposed guidance and the auditing standards. We share those concerns as well. Assuming we are able to somehow overcome that, we don't have any issues with separating the two concepts of severe financial stress and probable dissolution. We do agree that they're two different things. And we do agree with separating them, assuming again that kind of disconnect that we see between this and the auditing standards is overcome. Thank you.
Thanks, Heather. Elizabeth?
I do agree with separating them out. U.S. governments are different from businesses, and I think this note disclosure would show the public just what is going on that is creating a severe financial stress or probable dissolution.
Great, thank you. So that is everybody for question 1. We'll open it up if there are other comments or if the board members have questions of the participants. Again, please use the raise hand feature in Zoom if you're virtual, or turn your name tag up if you're here in the room. And I see Bill.
Thank you. Going against my profession here, I guess, is what I have to say. I struggle with the idea about, we have the going concern language, and I appreciate the idea of looking for consistency. However, clearly governmental accounting and reporting is different than, certainly private business or public company, and even not-for-profits as well. Obviously, there's some alignment in all of those, but there's definitely differences. And I think specifically as the issue goes to, I listened to the first open public forum that you had on this subject and heard similar comments related to consistency and standards. There's inconsistency now. Will they ever align? And I think from my perspective, the GASB would want to do what's relevant to governmental financial accounting and reporting. And I think this separation, delineating what is a financial stress issue versus what is simply an organizational continuation, if you will, is relevant and important.
Joel?
So I'm going to preface this question, which I'm going to direct to Elizabeth, with we understand the desire, in effect, at some point, need for the auditing standards and the accounting standards to make sense to each other, and we certainly are open to and continue to listen to the AICPA and those in the profession to see what we can work out with that. But Elizabeth, my question for you is, we hear a number of people throughout these public forums kind of say that going concern is a understood term. Like, we've been using it forever. People understand it. In your experience, not being an accountant, but somebody, an attorney working in public finance, do you think people in the government public finance world know what going concern means? Or is that a term they're kind of so used to that us doing away with it is just going to, totally kind of, take them out of sorts?
Any change takes people out of sorts.
I guess better said, is it understood
I'm
to what it is?
Being flippant, sorry. Do I think that non-accounting governmental people know what going concern means and is? Maybe. I think they're afraid of it. I think if their accounting staff or their auditor comes to them and says, we have to put this in there, it causes quite a panic because they're saying, oh, well, you have a problem. While I appreciate the changes that would have to occur, I don't think that a change would be very problematic. I think people would adapt. I think they would understand. It's going to take some, obviously education, but I think that especially when you separating the two out with the severe financial stress, that they will understand. Governmental agencies and entities deal with that probably every day. They understand that very much. Probable dissolution, they probably don't even think about it because it's really not there. I did appreciate Bill's example very much, just to show how it could not be so detrimental that these things happen. But I don't think a change from non-accounting people will create that big of an issue.
Thank you.
Tony?
Thank you, Deborah. I just wanted to follow up and I appreciate Bill's comments about the differences. I think most of us, not all of us, have worked in government a long time or maybe our whole career, and we appreciate the differences between for-profit accounting and auditing and governmental. However, especially being from the ASCPA, is obviously near and dear to many of our hearts who are on the audit side, is there are going to be concepts that overlap. How they are defined and maybe applied could potentially be different, but you're always going to have concepts like we would request going concern be applicable in both situations or both industries, subsequent events, related parties. There's going to be commonalities between the two, even though the underpinnings might be varied. So I did want to emphasize that we support GASB's efforts here to better define that, at least in the government space, as going concern, as we do appreciate that there are differences in a governmental space and are supportive of the direction of severe financial stress and probable dissolution on their own. However, still feel they warrant and belong under a similar concept or umbrella, so to speak, of a going concern definitions. Thank you.
Zach?
One thing that I just wanted to add that I think should be hopefully at the forefront of the board's mind as they're making a decision on whether or not to move away from going concern is what really are the objectives of this project, right? If it is to improve consistency in what gets disclosed, I'm not sure that this necessarily does that. I think going concern, to your point, I'm not sure how well maybe the common person understands that term, but I do think the definition is currently more precise than what the definitions are of, say, severe financial, and we'll get to that. I think it's a later question, but if the objective is to improve consistency of disclosure, I don't know that this is necessarily it. If the goal is to have more disclosures or more opportunity for disclosure so that there's an opportunity for awareness when a government is maybe in distress but doesn't meet the specific definition of unlikely to meet its obligations over the next 12 months or whatever the current definition is of going concern, then perhaps that's a route to go. But I guess I just want to make sure that the objectives of the project are kind of the forefront of when you're making that decision.
Thanks, Zach. I'm not seeing any other hands at this point, so I will go ahead and move on to question 2, which is, do you agree with severe financial stress being a current condition rather than a likelihood of a future condition? Why or why not? And we will go up the alphabet this time, starting with Elizabeth.
Maybe I agree. Maybe I don't. I do think it is like it can be both. I do appreciate that if it's a possible future condition, that would be covered under 102. I do think it is a current condition. I just struggle with the likelihood of a future condition because to me, severe financial stress is sometimes continuous, and that's what I struggle with.
Thanks, Elizabeth. Heather?
Thank you. We do agree that severe financial stress is a current condition. And kind of piggybacking off of what Elizabeth said, while I do understand that it can continue into the future, we're just not sure that with any kind of reliability that we could predict into the future what our level of financial stress is going to be at some point in the future. So we do agree that it's a current condition.
Thanks, Heather. Bruce?
I'll echo both the previous comments. It's definitely a current condition. There is a neat aspect of it that is about the future, but despite the best efforts of research, we have no ability to really predict fiscal health much more. We can kind of get it about a year out, but anything beyond that, and we tend to be relatively inaccurate. And that's because there's a lot of things that go into it and a lot of things that we can't necessarily control for. And so being able to say that it is a future condition or the likelihood of future condition, we hope that's what it represents, but definitively we can't actually say that. And so the absence of being able to support statistically that it's leading towards that, I would have to say that I agree that it is going to be a current condition.
All right, thank you. Alicia?
I agree as well. Citizens and stakeholders need to know about problems that already exist and are affecting the government's ability to provide services today. So focusing on the current conditions makes the disclosure more transparent and meaningful by focusing on the facts, which is what we talked about in our comment letter earlier this year, rather than relying on the predictions that may or may not happen with the local government.
Thank you. Zach?
I would agree. I think stress is a symptom of a condition as of a point in time. So severe financial stress as it's laid out, I would agree with this question.
Thank you. Tony?
The AICPA disagrees with limiting severe financial stress to only a current condition. We agree that it can be a current condition, but we believe that triggering a disclosure near or at the point of insolvency as of the financial state is too late to meet public interest expectations and to be useful for financial statement users. Financial statements can be issued, excuse me, months, even years after that balance sheet date. Having this information disclosed at that point would be, I think, not as useful or even irrelevant to users to find that information out only as of that point in time. In addition, because I'm representing the AICPA, I have to reference AICPA auditing standards, and those standards require auditors to assess going concern over a 1-year look-forward period. And the views in this preliminary views will limit this disclosure only at the balance sheet date. ASB, the Accounting Standards Board, did outreach and found out that 80% approximately of respondents believe that management should lead in disclosing financial distress, not auditors. So if there's this mismatch where the auditors are assessing using a look forward and management's doing it as of the balance sheet date, it's going to be an auditor driven rather than management led disclosure, which is contrary to what ASB found from stakeholders. Therefore, we recommend including a look forward period consistent with the auditing standards when it comes to severe financial stress. Thank you.
Thank you. And Bill?
I agree with a lot of that. Yeah, I think it's difficult. It certainly is a point in time issue, but it certainly, as Tony pointed out, is relevant as you're doing an audit that's done obviously after the balance sheet date. And I think from some of the other viewpoints that I've heard in the past, that the users are looking for this type of information prior to actually getting to what's being identified here as severe financial stress. And that's going to be a challenge, I think, no matter what you do with this standard. That's going to be a challenge for the entity as well as the auditors associated with those entities. But I think you could certainly add a component that looks out into the future past the balance sheet date.
Thank you. That is everyone for question 2. So we'll see if there are any follow-up comments or questions from board members. Joel?
So, Tony, I might put you on the spot a little bit.
I figured.
So, we've had these discussions in other forums, read the letter. Our objective in saying near or at insolvency, the near part was our attempt to get the disclosure earlier and remain in that public interest that the forward look that you're talking about. We don't disagree with, right? And in a way, in that we're trying to get the disclosure before it's too late. Like we don't want it to be really late in the process. So being near was our attempt at doing that. And if you compare that to the current, to 56, right? And if you want to project out, or the FASB literature, it's about within the next 12 months, are you not going to be able to pay your obligations? More or less, I'm paraphrasing, but that's more or less what it says, which to me would be the equivalent. If we were to have said the equivalent, we might have said near or at, not near. We would have said, are you within 12 months of insolvency, not near insolvency? And me putting you on the spot is, in our view, or my view, I shouldn't say our, my personal view is being in a government world where in the vast majority of the times when we have severe financial stress, it happens slowly. It doesn't happen quickly. It doesn't come about because of one thing. It's happened over time. It happens slowly. And so being 12 months away from insolvency is a later time period than being near. A government hits near insolvency before it gets to being 12 months from being able to pay its obligations, because the government has so many levers to pull to satisfy obligations, do other things, cut services. It can do lots of different things before it finally gets to the point of insolvency. So it hits doing a lot of the things that we tried to put in the factors to consider of being near insolvency way before it's 12 months away from insolvency. And so I guess, does that track with you, or was your interpretation of near different than that? And or would in your mind, the 12-month look forward be 12 months away from being near insolvency, which I think would be kind of hard to predict? But that's me putting you on the spot. See what your reaction is.
Yeah, that was a lot, Joel, and I appreciate the question. And I'm not representing the ASUPA with this response. It'll just be my personal view. But I feel, while it'd be hard to predict, being near is where I'd focus the 12-month look forward. I think we've mentioned or discussed that not every entity will be insolvent eventually, but they can be near insolvent for a very long time. And I think users still want that information. So assessing it from this near aspect, which I'm not going to say I completely understand the definition of near exactly or how that would be assessed. But I would, to your one point, not necessarily just focus on insolvency itself, but the concept of looking forward to near insolvency. Does that answer at least that piece of your question?
Yes. I mean, we tried our best to describe near. It's an imperfect science for sure. So Yes. Thank you, Tony.
I'm gonna wait till 3.
I don't see any other hands of people wanting to comment on question 2. So we'll move on to question 3. This is now getting into the topic of when severe financial stress disclosures are required. So paragraph 2 of chapter 3 of the preliminary views proposes that severe financial stress disclosures should be required if a government is experiencing financial stress at such a degree that it is near or at the point of insolvency. The board believes that there is no definitive ratio, metric, model, or combination thereof that would identify severe financial stress for all governments. A government would be at the point of insolvency if it generally is not paying its liabilities as they come due, or is unable to pay its liabilities as they come due. Being near insolvency refers to the severity of a government's financial condition, being in close proximity to insolvency but not actually insolvent, rather than a time horizon in which a government will become insolvent. Example indicators are proposed to help a government assess whether it is near insolvency. Question 3 is, do you agree with the proposed requirement to make severe financial stress disclosures if a government is near or at the point of insolvency? If so, why? And if not, in what circumstances would you propose requiring severe financial stress disclosures? For this one, we're going to start with Tony.
Thank you, Deborah. Our letter did not address specifically the definition or connotation of near. We focused more on the look forward period, but based on what I just responded, I think to Joel's question, we agree, or I agree with having the disclosures if a government is near or at the point of insolvency. I do acknowledge that assessing the near and how to apply is subjective and could be difficult. I think utilizing the indicators, as we'll probably touch on in the next question, is beneficial, and we appreciate those. But I think our focus is from at least what we did discuss was more on the look forward and getting to a point of assessing the severe financial stress, either at near or the point of insolvency.
Thank you. Going down the alphabet, we're going to go to Zach.
Thanks. So, I think this gets to the heart of the discussion that Joel and Tony were just having. And again, I want to echo that I appreciate what we're trying to do here, that we want users of financial statements to, as early as possible, know when there's trouble on the horizon, right? So they can make decisions. But I do have significant concerns with how we are kind of broadening that assessment. I think we just talked about some of those challenges when we described near insolvency and even maybe being challenged to try to concisely explain, well, what does that even mean? I know the definition, it says in close proximity to insolvency, but if it's difficult to objectively measure. So when you think about what we currently have under going concern, there's some subjectivity and judgment there, but it is very precise what you're like. You're pretty much saying, are they going to be able to pay their bills over the next year? When we're talking about near insolvency, we're saying, okay, you look at this whole litany of different indicators, and based on that, is there a problem people need to be aware of? Or might they end up in insolvency at some point down the road, but not really measuring how far into the future that might be, a year, 2 years, 5 years, And so I think that's the challenge here, is in trying to do something like this, to have preparers know when they've reached that point that they need to disclose something, and having auditors agree to that. And currently, our audit opinions for going concern, we actually have to, we have to attest that we've looked at going concern, and that, our audit opinion actually covers that. And so I assume whatever this new PV looks like, or whatever, ends up coming out of this, that our audit opinion will have to speak to that. And so if you have a term that's very imprecise like that, it gets very difficult from an audit perspective to us to get on the same page with management. So I believe that concludes my thoughts on this.
Thank you. Alicia?
I agree with the disclosures. I feel the key aspect of providing these disclosures is the transparency piece to help the citizens and creditors and everyone that needs to know the information and severity of the information and to have that information readily available to them. But as mentioned before, I think the issue comes with the judgment of the situation. But as we stated in our comment letter, I mentioned before, is to focus on the facts. Is we recommend to try to focus on the facts in every disclosure that you give. But I think transparency is the key with these disclosures.
Thank you. Bruce?
Sure. So I definitely agree that having the required disclosure is a good thing. I think my view is kind of predicated on the research out there that says the more we relay the financial condition, the more information people have further in advance about the financial status of a government, the more likely the government is to address those problems. So it's not just a matter of saying or relaying here's the data that we're in a severe fiscal stress, but if that's part, the metrics are part of the annual reporting in process, whether you're in that stress or not, helps to kind of keep the government from eventually going into that position, especially considering the metrics that we can use to measure fiscal stress they're all over the place. There's about 270 different financial ratios that governments in the US alone use to measure their financial condition. So it allows governments to pick and choose from year to year what variables they're using if they need to. And there's definitely instances where we've seen that governments have done that. So I think having that set of here's how we measure it and here's that it's always going to be relayed provides that certainty and assurance that everybody can understand what that condition is. That gives the ability of the governments and the communities to understand where everything is so that they can make decisions appropriate and far enough and ahead of time. Because if you're talking about a government that's having to drastically cut services last second because all of a sudden they find themselves in a position of severe financial stress, that's going to have real meaningful and likely negative impacts on the minority communities, the low-income communities, those who need the services the most, and the communities, the elderly, etc. And so we want to try and avoid those kind of things from happening. So more information throughout the entire process helps us to make those better decisions along the way.
Great, thank you. Heather?
Thank you. We agree with Alicia that the information should be disclosed for transparency purposes, and it's just critical information for users to have. That being said, we also echo Tony and Zach's concerns with the near insolvency, the use of the near insolvency term. Perhaps some subjectivity and varying interpretations is going to be unavoidable to a certain extent. We understand that. But we just feel like there is a little bit of a danger there in just having such a wide interpretation of what that means, though we do appreciate the inclusion of the indicators.
Thank you. Elizabeth?
I do agree with making the disclosures if a government is near insolvency. I struggle with at the point of insolvency because to Joel, to your question, I think at the point of insolvency is too late. So I think that it would be better if the further disclosure to be if the government is near insolvency, because at the point of insolvency is just too late. If that's the goal of this, I appreciate the indicators and so forth like that. We'll discuss that next question. I have a lot of thoughts on that, but I do think the disclosure should be made for what Alicia said and also Heather.
Thank you. And Bill?
Well, originally I agree, and as I'm listening and thinking about some of the other comments that I've heard, as an individual and somebody that's been around, presented to government and government bodies, talked to finance directors who prepare, obviously auditors, maybe getting away from this near or at insolvency and talking more about the indicators or the issues that are potentially pointing out that they're getting to a severe financial stress. So talk more about the symptoms of versus, if we could use the term that insolvency is a disease, if you will. Before you get the disease, you want to pick up on the symptoms and start pointing those out. And maybe that needs to be the focus. Struggle, and I guess it's the next question. You have examples in paragraph 22 as it relates to some of these things that are indicators, and I appreciate your hesitancy not to want to write anything in stone, but some of them are very common. The fact that somebody can't pay their bills, can't make their debt service payments, have significant reduction in tax revenues or something like that. I mean, I think these are pretty common throughout all governmental entities. Obviously, business type would be fees or something like that. So there's nuances to each component of that, but maybe it's more of an issue of looking, as I alluded to, the symptoms versus the condition.
Thank you. That is everyone initial response to question 3. So we'll open it up for follow-up comments or questions. Alan?
Bill did a great job of segueing this for me, so I think I'm gonna try to pick up on what Bill just said, because so far I think in the couple of public forums we've had, a lot of this is about what does near mean. And Joel started to go into that a minute ago in the last question and go to what near means. Because I do think, and Zach, you mentioned this a minute ago about what the benefit is. You might have mentioned a minute ago about, when they're going to be insolvent. Part of this project is we're not trying to predict when they're going to be insolvent. Severe financial stress is worded as such as where they may never be insolvent. They may never get to insolvency. Part of the current literature is you're 12 months from unable to pay your bills. That's 12 months from insolvency. We're going away from that and saying, when you're in a position whereby you're near insolvency, you may never get there, right? So severe financial stress is not a prediction of insolvency. It's a prediction of financial condition. And so you can have a government, in a hypothetical situation, you can have a government that has a very low general fund balance. They have operating losses in their enterprise funds. They have structural budget issues that they're using a lot of one-time funds to plug their budget. Yet at the same time, you could say, well, they're really close to being insolvent. Maybe 12 months they're from insolvent. But you know what? They can issue a bunch of brand new debt to fund operations, even though they've never done that before. They can reduce services and lower their services, even though they haven't really done that before. They can stop making the full ADEC payment to the pension fund, even though they've always done that. So there's so many levers a government can do for a very, very long time. And then reality is may never get to insolvency. And part of what this project's trying to do is get those situations for those governments when they're in that financial condition to have a disclosure. So you almost have to disconnect yourself from, and maybe this is just broader to the auditors on the call, disconnect yourself from anything trying to predict or trying to say when you're going to get to insolvency to are you in a certain financial condition, and it's evidenced by these indicators we haven't gotten to yet, but you're there and you're there at your end, and you might be there for a very long time. And you might never get anywhere past that. You might actually recover. Hopefully we do recover and don't end up staying there, but you could be there for years and trying to deal with that. And so those governments are like that, even in today's environment, who don't have going concern opinions because they never get to insolvency. They would have severe financial stress disclosures. So if you think about it framed that way and disconnect yourself for a minute from prediction of insolvency to just financial condition and what financial condition you're in, when you think about it that way, does that help you frame about what severe financial stress is trying to do? And it's not about a prediction of insolvency.
Bill?
Yeah, just to give that a little more context and flavor, if you will. We had a landlocked in the sense they had no room to expand their tax base entity in Florida. And in Florida, just real briefly, the Auditor General identifies that as an auditor, you've got to look at financial condition, and then the statute talks about a financial emergency, which to me would be very much in line with what we're identifying here as a state or a potential state of insolvency. And my point to that is that government, for years, we were reporting about deteriorating financial condition within that government. And to Alan's point, what they ended up doing was they ended up getting rid of the fire department, letting those services be taken over by the county. They ended up, with the expansion of the tax base through building up versus out, and the environment in the Florida area of having people come to Florida, they were actually able to expand their tax revenues over the years to now they're a thriving government. But for a while there, every year we had this idea about, hey, you guys are, you continue to lose your tax base, you continue to underperform, you have high liabilities related to your fire and police benefits and things like that. And so that's an example where you see these things actually occurring in real life. And I think, yeah, pointing out the near insolvency will be a struggle for auditors because we want to be conservative. We don't want to get caught not pointing something out when it's potentially there or it happening after we don't point it out, if you will. So looking at that issue may be a good starting point for the board.
Zach?
I just wanted to say, Alan, that I appreciated that framing of what's trying to be done here. And I would say that few people would argue that that would not be something that users would want, right? To know not only when are we, or when do you predict we're not going to be able to pay our bills, but when is there an issue that could when is there stress that it's not going to take much to tip that over the edge to become a problem. And I guess my only question or challenge to that is, are the financial statements the right tool to do that? Particularly when we look at indicators and we say, well, there's a whole bunch of them. There's no exact, framing of those or combination of those that are necessarily going to get you. It's still this, you're kind of having to make this determination. And so when we're looking at, financial statements, we typically think, all right, they're reliable, they're consistently applied. There are a lot of other tools out there in terms of early warning stress systems. We have some here in the Commonwealth where we look at ratios and other factors. I know rating agencies use other things as well in terms of demographic data and forward-looking information. So that would be one thing I'd add to the conversation is, certainly it's a lofty goal and it's something that we'd all support, but are the financial statements the right tool for that effort?
But Zach, putting that aside for a minute, because that's not a thing for the moment. Sounds like though you understand the distinction between current literature and current guidance being, going to term being 12 months from insolvency. And what we're trying to do here of you're in some pretty bad, severe financial stress, which may never result in insolvency. And seeing how those are not the same thing.
Yes. No, I thought you did a great job of framing that.
Any other comments or questions on question 3? Oh, Tony?
Yeah, just a real quick follow-up, and I appreciate Zach, Bill's, and Alan's clarification there. I think the assessment is going to be subjective. I think the examples you used, Alan, issuing debt or so forth, and when you're pulling a lot of those levers, you start having a lot of those indicators arise, and I think that's where the assessment by a professional, whether it be management or auditors, will come into play. And I think what you've provided in the PV is helpful by providing those indicators. But it's not going to always be the same for various governments. And sometimes there's going to be indicators that arise that aren't even on your list that I think are going to be present as well. That's going to kind of alert that you are kind of getting close to that near point, to your point, Alan, which I think is important. And I really like the emphasis that the staff and the board have made that it's severe financial stress. It's not just one or two potential indicators. All of a sudden, we got to start worrying about having disclosure because it might not be that situation, as opposed to maybe it's a severe indicator by the judgment that will result in one. So I just want to emphasize there's going to be a lot of subjective judgment by professionals on both management sides and the auditor side, and providing these indicators, I think, is what's going to assist getting to that point. Thank you.
Bruce?
Just note, since Tony mentioned it's, the subjective aspect, historically when we've relied upon governments to relay information about their financial position based on their own subjective interpretation of where they are, they have always, or have generally always, presented themselves in a light better than where they necessarily actually are at that given point in time. So if we can pick on Detroit, for instance. Detroit, prior to everything that happened with their bankruptcy, presented themselves that they were relatively financially healthy. That's a fairly common thing. And so I think if we wait for someone to say, here's my interpretation of where we're at, and so now that I'm in a bad position, it's almost too late. You want to kind of remove that subjectivity, or so that there's a consistent way of measuring it, or require that the information is being consistently provided over time so that there's as little room as possible for somebody to take that subjective interpretation and relay it in a way that is contrary to or an interpretation that everybody else might have for that government. And hopefully that makes sense. It made sense in my head, but
All right, anything else for question 3? Not seeing any. Question 4, we've kind of touched on this a little bit already, but it's, do you agree with the proposed example indicators that a government might be near insolvency? Why or why not? For this one, we are going to start with Heather.
Thank you, Deborah. So we agree with the example indicators, and we appreciate the inclusion of those, although it is a really subjective assessment. We appreciate you including those to try to kind of help us achieve some consistency. We really did like the inclusion also of paragraph 23 of that chapter, which talks about the timing and interrelationships and severity. We thought that it was really helpful to put some of the information in paragraph 22 in the appropriate context and kind of let people know, well, just because you have maybe like 1 or 2 of these, you really have to consider the timing, the interrelationships, and the severity. So we really like that paragraph. Hopefully it makes it into the final version, but I think to sum up, we agree with the indicators.
All right, thank you. We're going to go up the alphabet this time, so Bruce is next.
Sure. So I do like the list of indicators, playing the academic professor a little bit. We started developing indicators to measure fiscal stress back in the 1880s. Out of the business literature, the businesses have an advantage of being able to do an event history analysis that corresponds the different indicators with whether a business closes its doors or not, because we have a much clearer indication if the business goes out of business or not. In the government context, we don't necessarily have that freedom or that capacity or opportunity to look and see who's closed their doors or not, because often when you get to that point, we have governments step in and help. I just moved to Virginia from North Carolina. The government was in a financial stress. The state would come in early in the game and help the government out, so you wouldn't even necessarily know that a community was in financial stress. And so, we have a lot of indicators. We don't necessarily know which ones are the best indicators. So having kind of a broad spectrum is a good thing, which is one of the things I like about the list. It is a really broad spectrum. It also doesn't take away from the indicators that a lot of states are already acquiring. So about 34 of the states require that local governments report in on their financial health indicators in some way. They all require different sets of data being turned in. They're all looking at different measures. And so this is almost kind of a nice middle ground from where everybody's looking at. So while there's going to be no such thing as a perfect list, I think it is a pretty good list that covers the overlap between where everybody else is currently looking for how we can understand what fiscal stress is and if you're in stress or not.
Thank you. Alicia?
I agree with Bruce and Heather as well. I feel, as each government operates differently. They come from a different demographic background, economic background, legal context, different situations. Not every indicator will apply to every organization. So I think that's key, just knowing that going into the disclosures and the information for disinformation for near solvency is key. So I reiterate what Bruce and Heather has said.
Thank you. Zach?
Thank you, Deborah. I did not have any major concerns with the indicators that were laid out. Kind of feel like that's something that at this point in the process, I'm more focused on the direction of the project. So essentially, are there enough indicators or enough supporting indicators to where you could get to defining near insolvency, basically, is where I'm looking at. In terms of hashing out, do we need a few more indicators? I feel like that could easily happen at the exposure draft level. And so I do not have, well, I guess the one other thing that I would point out is that I do think there's a major difference between a government being unable to make payments and not making payments. And so, I know that we've had examples here in the Commonwealth where we've had localities that weren't paying their bills. And at the end of the day, it wasn't that they had severe financial stress or complete inability. They didn't have the funds available. It was more, from a mismanagement perspective of just not making payments or being late on payments or not being aware that you had certain funds available that could be used for certain purposes. So I do think that that's an important distinction. To me, being unable to make your payments is real insolvency. Not making your payments may or may not, in the way that I look at that term.
Thank you. Tony?
Based on the broader concerns raised in our letter, our committees didn't deliberate the indicators specifically. However, from a personal standpoint, I think I've already mentioned, I agree with the indicators. I appreciate the ones that are listed. I think they're clear and should be considered in an overall assessment. I believe GASB 56 has indicators already, so auditors at least and management should be familiar with applying indicators to situations like this.
Thank you. Bill?
I don't have anything to add on this.
And Elizabeth?
Okay. I like the indicators. I think that there needs to be a concept, and I think people would agree with this, that it's not just one, it's not maybe a couple, but it's the totality of the circumstances. So it's everything that is going on, that this is not meant to be a checklist. So some language, I think that it's to make it clearer that it's the totality of the circumstances that makes you near a problem. Some of the indicators I have a little problem with because I don't know that in my mind they are indications of severe financial stress. I think they are indications of management doing their job, such as like new sources of financing or a different way of financing things. People being innovative or seeking new sources doesn't mean that they're in severe financial stress. They're just seeking different ways. I know, stop before you say one word. I saw that look. I think like the dispose of assets, there needs to be like an unusual disposal of assets because people dispose of assets routinely. Restructuring debt in and of itself is not an indication of severe financial stress. It could be just a good thing to do because you want a lower interest rate, so to speak. Or something else has happened. All of that goes to saying that it's the reasoning behind it, the totality of why you did these things. And then I don't know what certain bonds is for the default on certain bonds. I don't know what that means. I'm not sure anyone would know what certain bonds means or certain obligations. So while I appreciate it, I think there needs to be a little bit more around it to say that it's the totality of the circumstances, like I said. And for the examples, on one example, you say you have a drawing on a reserve fund, but you specifically say that a drawing on a reserve fund is not an indicator, but you have it with the drawing on a reserve fund and short-term borrowings together to say that that may be that you're near insolvency. To me, that's inconsistency. So if you're going to have an example, put more of the indicators and not one that you specifically say later is not an indicator.
Thank you. That's everybody for question 4. Alan is ready to say something, so go ahead.
I wasn't necessarily going to, but I feel like I should have to now because the folks that are on the call, the folks not in the room probably didn't realize why Elizabeth said that to me. What I was going to say, and I appreciate what you said, and I appreciate the feedback you just given the indicators, because we've talked this a lot. But I was going to ask a question related to it, actually. So maybe my poker face wasn't the right poker face. The question was about that, as we talked about it a lot, right? And there's 2 words in front of every one of those indicators you said. No, and I'm going to ask you whether or not we missed the mark on that, or do you bite down those 2 words and know they're there, or you jump over them? Most of the things you said is need to restructure debt, need to find new sources of revenue. The need to is really important to the board and saying, this isn't a choice thing. You have no choice. You need to do this. And so is the need to getting lost? Those 2 words are really, really important. Is that helpful that they're there? Or you're still where you are in terms of like, they're not always negative? Because we were trying to make it where it was the negative thing, where it was something bad. It wasn't, you just found new revenue sources, great. It was the need to is very important, I think, to the board when we put those words there.
I think it can be easily skipped over, the need to.
Okay. But the intent of that would resonate. That intent of that resonates with you, though, right? It's like
no, the intent does,
okay.
Yeah. But I mean, a lot of governmental officials are going to say they need to restructure because they want X. I think that it's more important for the real reason why. And I guess I'm in a unique position. I know the reason why. Not everybody does. But I think maybe it's such as need to, like that kind of dilutes it, right? Not really needed to, but such as needed to. So yeah.
Your point, we were trying to get to the scenarios whereby
It's a must.
It's a must without saying must, right? It was like, you really don't have a choice. This isn't because you want to, right? It's because you have to. And so that's fair.
Bruce?
So the exchange between the 2 of you, the thing that's popping in my head around need to versus must, we're assuming that when governments are taxing, they have the revenue coming in, they're taxing at their full capacity, and so, or they're have as much coming in as they can't really go beyond that, and then they're running out of resources, and then having to kind of make these choices of going, well, do we dispose of assets or what have you? Where realistically, most governments are taxing at their full capacity for sales tax, but property tax, which is the most stable form of revenue for governments, the vast majority of local governments in the US aren't actually taxing at the full property tax rate that they're allowed to tax. And so you might kind of go, well, are they seeking new sources, or because they've capped out where they already can go, or are they seeking new sources because they don't want to go to their cap, and so they're seeking out alternatives? And so are they seeking to shift the burden away? And so, is it that they have to do this, or is it that they want to do it? And so there's a little bit of kind of uncertainty around, some of the things reducing services, particularly in that B category of, do they have to, or are they just choosing to do that because they don't want to go to that extreme of collecting the full amount of tax available to them? Which I'll add, there's a paper by a guy, John Decker, that was in Public Finance Journal about a year ago, that was looking at counties in Florida on what determines whether they go to that full extreme of taxing everything that's available to them or not. So, it's out of the 67 counties in Florida for about 15 years. The only county that ever actually went to that full extreme, I think there was one. I want to say it was Alachua, but I'm not entirely sure offhand. I'd have to go back and reread it. But nearly everybody was well below that. And they were making financial decisions going, well, we're in stress, but they really weren't stressed because they still had simple things at their disposal. Well, stop there.
Thanks, everyone. I'm not seeing anyone else for question 4. Oh, Jeff, thank you.
Sorry, I'll just jump in. This is not a question for anybody in particular, but if anybody who wants to jump in, one of the things I was wondering about, thinking about this and listening to the discussion is, we received a lot of feedback to the PV on the notion of, obviously, of near insolvency. And, we have that paragraph where we attempt to describe what it is, close proximity. And a lot of folks said, you need to give us more detail. And then we got a lot of feedback. We had the indicators, and the indicators broad range as we talk about. And I, as a board member, want to be careful, right? You try to make that thing exhaustive or a longer list, then you run the risk of, it's a checklist. There can't be anything else that could possibly, sure there can. So my question is, if you were thinking about this notion of near insolvency, and I know this is just an opinion, what would be, do you think the board has a more profitable way to educate or explain what near insolvency means? Would it be through more and better example indicators, or a more detailed description of what we think near insolvency means? Which way do you think would be better for the board to go?
Bill?
I would think define it better from your perspective. I think indicators would not do that. I think that would just create what you described as more of a checklist.
Bruce?
Yeah, I would go with probably the better, more examples. The more concrete that you can provide as an example, whether it's a case study, a vignette, or something that provides here's city A, and kind of walks the person through an interpretation or an understanding might be better. Thinking from a classroom experience, if I have students who don't understand, the more data I throw at them, that doesn't help them understand more. It's the discussion around the interpretation, the ideas that provide that better comprehension. So I think you're more likely to have people understand better through the explanation and the example side.
Tony?
I agree with what Bill said. I feel like defining the concept would be more beneficial, at least to me. I think the exhaustive list of indicators, you're never going to have an all-inclusive list Jeff, to your point, the longer you get, people are just going to be scouring that list and making sure they have at least 5 of those, and they feel that they're going to be at that point. So I think just to try and do better define the concept would be appreciated. I'm not sure I could help you help define it, so I'll just sit back and wait for the board to do that. Thank you.
Zach?
Yeah, I would echo maybe a piece of each of those last statements, and that's that, the current definition is that it's in close proximity. We already kind of talked about earlier. My concern is near insolvency definable? But if you determine that it is, and the definition is in close proximity, then you're essentially saying, that there's no silver bullet on what it is, but there's a bunch of different things that kind of make it feel that way. And so if the definition stays like it is, I think for me, the longer the list, the better, because that helps you to kind of develop that feeling. But obviously, if there's a way to better define it, that would give people a better measuring stick, I think.
Heather?
Thank you. Well, we talked earlier about the issues with the near insolvency term, so I think most of us probably would agree that more specifically defining it would help. But I do agree with Bruce that examples would be helpful, if at all possible. That's always a request that we kind of get from our audit clients. If we can provide more examples to kind of help highlight concepts for them, I think it just kind of helps to help them better understand what they need to do and how to apply those concepts. So I'm definitely in favor of more examples if that's a possibility.
Elizabeth?
I think it's examples, and I think it's real life examples, not simple ones, but kind of large ones. And then you could even go to the next one and say, but if this changes, then it is near. If this changes, it is not. In 103 tax world, we have a lot of that in the tax regulations. They help a lot because you can apply it to actual real world and make that judgment.
Thanks, everybody.
I was debating what I was going to ask this, Deborah. We're at a point where I think we're probably okay asking it. Because we got through question 4. I was going to wait till 5, but it's okay, I think. No, it's relevant. We start out today, a lot of folks start out today saying, hey, we've got AU 570, we've got the auditing standards, we got going concern, and we've walked away from going concern. We've gotten to this PD, severe financial stress concept. But some folks have almost alluded to, we'll bring back this going concern idea and put that as over top of these 2 things, and we're all good because now going concern exists again. I wonder how you square this idea, since we've talked about severe stress level now, and it's near insolvency, which is not the same as not meeting or unable to meet your obligations. It's broader than that. So I wonder how, if you were to say you could just take probable dissolution and severe stress and put it under going concern as a concept, and then 570 is good, you can keep going on. The problem is some of what would be severe financial stress doesn't fall under that definition of going concern in 570 because they still can pay their obligation. They still have the ability to pay their obligations. And so how do you actually put all of that under going concern? Or would it be some of it's undergoing concern and some of it's not? So the umbrella might go over some of it, but it doesn't go over all of it. Because I think we all agree, current 570 would be 12 months from insolvency. Near insolvency doesn't mean you're ever going to be insolvent. So there'd be some of severe financial stress that would never be, quote unquote, 12 months from insolvency. And so would the umbrella just go over part of it? Because theoretically, I don't think it could go over all of it.
Zach?
It's an interesting question, Alan. I don't know that I would have a definitive answer on what my position is on that, but it got me to thinking that there is already a little bit of a precedent, or at least an avenue for that, based on, I'm thinking, RUD, risk uncertainty disclosures, in terms of things that are forward-looking. You're trying to put the alert out there for people to know that that's coming. So I don't know. I do think that there's at least the possibility that could be vetted out of, is there a way of keeping going concern, but having some additional, disclosure requirements kind of outside of that umbrella. But that's just kind of an initial reaction.
Bruce?
I would say it's nice to have everything in one spot, but especially since we're relying upon management and auditors to interpret the information, for the assessment, and you don't take the financial reports as any piece on its own. It's an assessment of the entire report of itself. And so while you can have aspects of fiscal stress show up under the going concern, I think it would also make sense that it shows up under other aspects as well, because it's not going to impact just one aspect of the financial report. It's going to impact every aspect of the government's finances. And so it would make sense that you would have tidbits of that information going throughout, and you could then have the auditor's report, an interpretation of that kind of brings them all back together at the end at a note, and the auditor's report at the beginning at some place that allows you to say, given these pieces from here and there, here's what we can understand.
Thank you. Tony?
Alan, I don't think you saw my face maybe as you were making those comments, but I just want to make sure we're not necessarily saying that just having it under this umbrella of going concern would automatically alleviate any potential changes or deliberation on the ASCPA side for the guidance. But to your point, maybe we need a whiteboard to diagram this. The 570 as written is the auditor's ability to determine if there's substantial doubt about going concern, not necessarily that there will be going concern issues, right? So is there substantial doubt that this entity might not be able to meet its obligations as they come due? How close are they? So it's this entire assessment. It's not just predicting. Obviously, 570 doesn't require auditors to predict that an entity will be won't be a going concern, but it's that assessment of, is there doubt that they won't be able to meet the obligations if we were doing severe financial stress, or is there doubt that they won't be near insolvency based on these indicators and so forth? So I understand what you're pointing at, but I don't think it's as easy as just slipping them in there and walking away. There's going to be some sort of, I think, correlation still needed on both sides. I hope that answers or helps.
Right. Well, given the time, I think we're at a good place to take our break. So let's take 10 minutes and come back, and we will start back with question 5 after that. All right, well, welcome back. I hope everyone enjoyed their little break. We are now moving into discussing the timing of the severe financial stress assessment. So paragraph 2 of chapter 3 of the preliminary views also proposes that the assessment of severe financial stress would be performed as of the financial statement date. The board believes that the resulting disclosures would provide essential information that supplements the amounts presented in the financial statements. The board did not propose requiring disclosures if severe financial stress occurred at any time throughout the period, because the board believes that would be difficult to assess and audit. The board also did not propose requiring disclosures if severe financial stress arises after the financial statement date, because of concerns about the availability and reliability of information to make the assessment in real time at the date the financial statements are available to be issued. So question 5 is, do you agree with the proposed timing of the severe financial stress assessment? Why or why not? For this one, we are going to start with Zach.
Thank you. So I guess I'll start off saying that I appreciate what I think the board is trying to help us with a little bit here, and that is by making this at the financial statement date, when you're trying to evaluate a condition, obviously the information is more reliable, and it's easier to really come to a good place on that. I do have a couple of concerns here about the timing. The first is, and we already kind of talked about this, is the disconnect with auditing standards. And so there'd have to be some kind of right sizing there to make sure that the time periods align. The second is, here in the Commonwealth, we oversee our locality audits. We don't do those audits, we do oversee them. And we have our office actually oversees a severe financial stress model. And so we're actually on the lookout for this. And the ones that we have identified in most cases, not in all cases, but in most cases, have a lot of trouble actually putting together their financial statements, period. Sometimes these financial statements are multiple years delinquent. And so when you're giving up whatever that period is, whether it's, in some cases, even just normally, it might take up to 6 months to produce financial statements. You're already getting a little bit less time. Now, I get to your point that if you're defining near insolvency to be something much earlier anyway, that maybe you're getting there. But I guess I just wanted to bring up the fact that in terms of a lot of times the places that are in these problems don't have the resources for financial reporting, and it's already very delinquent information as of the time you're getting it. And so then to have it as of the financial statement puts you even further behind. So I just wanted to bring that up from a timing perspective. Thank you.
Thank you. We're going to go down the alphabet for this one. So Alicia is next.
I agree with him as well. The timing of the audit completion is different for most organizations. Most time it's either 6 months or longer, as he stated in his case. So I would say that having the goal of meeting the financial reporting period date is great, but what do you have? What guidance would you give those that aren't able to meet that guideline?
Thank you, Bruce.
So I do think having everybody report back on a consistent date is helpful. It adds for comparability. It allows us to look from one government to the next, but also that same government over time. But just as my colleagues have pointed out, there's issues about data access. If we're reporting on that 1 year on the date of the financial reports, it might be too late by that point. And so I think some of this comes down to, are we requiring the consistent reporting over time, and then we're using that one point, or is it just we're relying upon that one point at the end? But I do think having a consistent date at which the reports are done is probably better for everybody overall. Thank you.
Thank you. Heather?
Thank you. We generally agreed with doing the assessment as of the year-end date. Obviously, we certainly appreciate the concerns of the time lag, and we've certainly experienced them, the time lag between the year end and when the financial statements are ultimately issued. And I think the PV document did mention that one of the reasons that we didn't decide to do it through the date this financial statements are available to be issued is because, you may not have all the information available in real time. So while we can understand why that information would be valuable to users, we agree with that it would be difficult to really make that determination in real time. And we also feel that there's an opportunity, if there is additional context that management wants to give, they could do that in the MD&A.
Thank you. Elizabeth?
I would just echo Heather's statement. I agree.
Thank you. Bill?
Yeah, I agree. I don't have anything to add here.
And Tony?
Per our letter, the AICPA disagrees with restricting this assessment only to the financial statement date. I started off with the forum presenting the reasons why. I don't think you need me to repeat them, but just removing that look forward, removing that early warning, doing that assessment going forward, having the auditor assessment disconnect from the management assessment is what concerns us.
All right, thank you. That is everybody for question 5. So we'll open up for other comments or questions. I'm not seeing anybody, so I guess we'll move on to the, Bill?
I I apologize. I have to amend my comment. I do agree with Tony. And I would suggest, I apologize. I don't know, I was confused on the question. I'll plead ignorance. I think maybe at least the date of the audit report might be more appropriate. And I thought we're getting into the dating of some of this or the timing of some of this, but that's what I think would be a relevant date.
All right, thank you. Oh, Joel?
Can I ask a question? Okay. So Tony and Bill, part of our concern when we, and Heather actually alluded to this, when we made the determination to do it at the financial statement date as opposed to date available to be issued, was we were worried there wouldn't be, it would be hard to accumulate all the information necessary to make that determination. At least that was a part of it. Are either of you not overly concerned that you wouldn't have enough information available to make an assessment like that so close to when you're issuing your audit report?
I mean, I'll jump in. I think it's an issue of severity. So if we're talking about severity, I think severe issues would be known by the date of the audit report. Now, whether or not, there's a multitude of issues that could culminate into, this issue being required to be disclosed or evaluated, then, maybe that's the opposite side of what I'm suggesting. But I think as an auditor, you're looking for obviously first and foremost material items. And so obviously this would have to, I believe, meet that criteria, I would think. And if it met the materiality criteria, we have that responsibility through the date of the audit report as it currently stands. So I don't know.
Yeah, I agree with Bill, Joel. I think even the one caveat or change I'd say, Bill, is material. It's much more than that. It's severe, right? We're looking for something even greater than material. And we do that forward assessment even currently under AC 570, and management should be doing it under GASB 56 when it comes to the current going concern disclosure. So it's not as much trying to find or dig for information as is a lot of this information is going to be aware by management, and they're going to identify it potentially, or it's going to be known. So when that comes up, to just say ignore it or not disclose it because it wasn't as of the financial statement date, to me seems counterintuitive.
Thank you both.
Heather?
Yeah, I guess I just kind of wanted to ask a question maybe of Tony and Bill, if that's okay, considering the point you just brought up. So if we're talking about a situation where we have our year-end date, but something comes up between that year-end date and whatever our audit report date is, I guess I struggle with, is that in the subsequent event area, or would that be under this standard? Because presumably if it was something significant, wouldn't we also potentially pick it up as a subsequent event? I guess I'm just kind of I'm trying to figure out maybe what bucket to put it in. If that date were to change to the date through which the financial statements are available to be issued.
I think it just depends how ultimately the severe financial stress guidance is issued or published, and the definition. I think it would fall under this standard, but potentially could. I don't think every subsequent event is severe financial distress. Whereas, I think it's a higher bar because of the severity of it, that I think there's going to be additional indicators to assess, and I don't want to place a hierarchy, but in my mind, I think it'd be a little bit different than just a subsequent event disclosure, because it impacts us from an auditing standpoint as well, than from our auditor's report. So That's the way I view it, at least.
I'm in alignment with that. I would add to that, in previous discussions, this available to be issued date, from what I was hearing, was causing some grief as to, well, what date is that? Is that the date it goes to the printer? Is that the date, you see the first draft, or, after the auditors reviewed it? I think that's another alignment that happens by using the audit date as well, for whatever that's worth.
All right, thank you, everyone. I'm not seeing anyone else for question 5, so we'll move on to the level of severe financial stress assessment. So paragraph 27 of chapter 3 of the preliminary views proposes that the assessment of severe financial stress be performed for the primary government, including any blended component units. The board believes that the concept of insolvency, which is the basis for requiring the severe financial stress disclosures, does not apply to reporting units less than a legally separate entity such as funds. So question 6 is, do you agree with the proposed level at which the severe financial stress would be assessed? Why or why not? For this one, we're going to start with Bruce.
I think I would agree. I mean, I think it makes sense to me, but it's one of those things I've kind of gone back and forth a little bit on, but I think it makes sense to include those component parts into it. And I think it just, for me, it just intuitively makes sense.
All right, thanks. We're going to go up the alphabet. So next is Alicia.
Yes, I agree as well. I believe this assessment provides a clear picture for the stakeholders about the overall financial health, which transparency, we've mentioned that several times before, instead of looking at the individual funds or programs. Thank you.
All right, Zach.
Thanks. So I agree in concept. I think if you're analyzing severe financial stress, readers of the statements are focused on the primary government, the reporting entity. Just as a practical matter, I'm not sure if there are certain indicators that would only happen at the entity level on that list of indicators, and how that might affect how a preparer or auditors might go about kind of looking and trying to figure out entity-wide. If you have to go down to the entity level to do some of that assessment, I'm not sure, but on the whole, I think that it makes sense for the assessment to be at the level of the primary government.
Thank you. Tony?
Our AICP committees did not deliberate this issue, but from a personal standpoint, I agree. I feel like including the blended component units makes sense based on how they're reported in the first place, following the criteria in GASB 14 as amended. So the primary government and the blended component units should be assessed as one. However, I do have some concern with the inconsistency with the same question when it comes to probable dissolution. And I could touch on that at that question, but basically in those instances where there's severe financial stress leading to probable dissolution of a blended component unit, I'm wondering if there's going to be inconsistency in how that's reported for that blended component unit.
Thank you. Bill?
Yeah, this one I disagree. I think when we talk about usefulness to the reader, and especially as it relates to business type activities, I do struggle with the idea of, first of all, we talk about major funds. Obviously, I would say the main fund in a general government would be the general fund. So its main, quote, operating fund. However, a lot of debt is issued against business type activities, and I would think the readers would be interested to know and want to know if those activities are struggling, right? And they'd want to know sooner than later. And often some of those bond agreements, or many of them, quite frankly, separate themselves from the general government, at least technically from a legal standpoint, as I read bond documents. And so, there's not the same rescuing that we alluded to as it relates to sometimes with the primary government having somebody come in, that those business type activities, transportation activities, sometimes could fall into this realm as well. And I do think there could be value to the reader to bring it down. That said, it would be difficult. I can see a lot of challenges associated with it, but I do think it would be useful information to the readers, especially bondholders or even ratepayers and folks like that of the government. Should we be in the business of water and sewer, as an example, if you're a citizen, things like that. Anyway.
Thank you. Elizabeth?
Like Bill, I do not agree. I think it should be for the business enterprise activities and blended component units like airport authorities. They are different in the bond documents, and thanks, Bill, for reading them. Appreciate that. I do think it would be important because it's a lot of users are not just looking at as the government as a whole. They are looking at that source of revenue, whether it's water or sewer or airport authority revenues, PFCs, and that payment of that debt or how strong that business is based upon those revenues, not the revenues of the government as a whole. I realize that would be difficult to do, but I think it could be done.
Thank you. And Heather?
So we generally agree with the proposed level. One, and for the reasons that that others have mentioned, one issue that I don't think I heard anybody bring up. So we did take note that the PV did mention that there wasn't specific guidance provided for discretely presented component units and referenced paragraph 63 of statement 14, which I think in most cases where the discretely presented component unit issues its own financial statements will be fine. But there are some situations where the discretely presented component unit doesn't issue their own financial statements. So it just feels like in those circumstances, maybe we're missing a piece. We would be concerned that we're kind of missing a piece there if there's no separate financial statements that are issued.
All right, thank you. That is everyone for question 6, so we'll open it up for comments or questions. Alan? Oh.
Bill, go first.
Yeah, and I mean, I am curious, and Heather, since you asked a question earlier, I'll ask you one. I mean, I guess I would struggle with if we're going to go to the discretely presented component unit, what's the difference between that and the major fund that's reported as far as being, in financial stress?
Well, I think we maybe touched on this. I can't remember who mentioned it, but we might have touched on it a little bit earlier. Maybe I think it's even in the PV that I guess depending on which fund you're talking about, it's not. And I know it can be different for like water and sewer, maybe if you have like a separate water company or something like that. But I think generally like a fund is not always a separate legal entity. So there could be other ways of, helping rectify the situation. Whereas like a discretely presented component unit, at least the way I think about it, that's a separate legal entity that could, in theory, stop existing as a, I'll use the word going concern, even though I know we're kind of bandying that about back and forth, but like in theory that could stop existing, whereas a fund would not necessarily in my head. At least that's the way I think about it.
No, that's fair. Understood.
I'm going to ask this more to Elizabeth and or Bill. If I heard you right, if we went down a path or thought about going down a path similar to risk and uncertainty disclosures in 102, where we say it's the primary government or any fund reporting a liability for revenue debt, which essentially probably would get your enterprise, a lot of your major enterprise funds in, you're basically saying something like that. Not all reporting units, just primary government and reporting units that have a liability for revenue debt. That would kind of do what you and Bill are trying to get at if we went down that path.
Potentially.
You have a water sewer fund that has revenue bonds and they're reporting the revenue bonds.
Yeah, potentially. And again, I think going obviously major fund wouldn't work because special revenue funds are unique and, quite frankly, they're meant to wind down, have whatever term you want to utilize there. But I do think the business type activities specifically are important to the reader of financial statements. I mean, if we see more bond issues probably in that arena than even we do in the general government arena, at least in my practice anyway. So, but as an auditor, I prefer you stay at the entity level. But I'm saying, looking at that as a user or reader and maybe the citizens, but as an auditor, the higher you stay, the better.
And I would agree with Bill. And I think maybe it gets you there. I don't think it gets you completely to all of these quote new disclosures. Sometimes in the management discussion, they will discuss the hardships that a certain fund is having or certain things that are going on. But again, not always, because they want to put it in at least a positive light. Some can't. City of Jackson, for example, they just can't do that for their water. But I think it gets you kind of there, but not completely.
Anything else for question 6? Seeing none, we'll move on to the severe financial stress disclosures themselves. So Chapter 4 of the preliminary views proposes the content of the severe financial stress disclosures. Those disclosures were adapted from the current disclosures required in Statement 56 for going concern uncertainties. Disclosures would be the reasons and causes for the condition, the government's evaluation of the significance of those reasons and causes, actions taken by the government in response to the condition, and known effects. If severe financial stress disclosures were required in the prior period and are again required for the current period, the disclosures should be updated to the current reporting date. And if they were required in a prior period and are not required for the current period, the government would disclose how the severe financial stress condition was alleviated. So question 7 is, do you agree with the proposed severe financial stress disclosures, including the requirements for subsequent periods? Why or why not? For this one, we're going to start with Alicia.
Thank you. Yes, I do agree with the disclosure requirements for subsequent periods. I believe it will provide a clearer picture of the government's financial health and where it is going for all the stakeholders involved, for the citizens, oversight bodies, and creditors to see not only where the stress exists today, but whether it's likely to continue or if it has improved, as you had said that there's different scenarios that could happen. It will allow for more informed decision and planning for the future. Thank you.
All right, thank you. We're going to go down the alphabet on this one. So Bruce is next.
Sure. So I think in the spirit of transparency, it's important to have that disclosed. You'll want the people in the community to understand how it was addressed. You'll want the interested parties to understand how it was addressed. And given that there is that subjective nature a little bit behind how we understand and how we interpret fiscal stress, being able to say, here's what we did to actually address the problem provides assurance that it was actually addressed, and not just that it's a subjective nature of how it's being reinterpreted, or that the problem wasn't just pushed down the road, that it was actually addressed along the way. And so I do think that's an incredibly important thing that needs to be disclosed for people.
Thank you. Heather?
So we generally agreed with the disclosure requirements, although in chapter 4, paragraph 2, we were not entirely clear on 2B, which is the government's evaluation of the significance of those reasons and causes. We, quite frankly, were just not exactly sure what that meant in light of it kind of seems to be repeating what is said in 2A, but otherwise we're okay with those. The disclosures in subsequent periods. So we agree with if the severe financial stress is continuing, that it should be obviously continue to be disclosed. We were not huge fans of of including if we're not repeating the SFS again, how it was alleviated being in the footnotes. We thought that maybe was something that was more appropriate for management to describe in the MD&A.
Thank you. Elizabeth?
I agree with it being disclosed and the subsequently disclosed.
Thank you. Bill?
Yeah, I agree with the disclosures.
Tony?
Our committees, because of the broader issues we brought up in our letter, did not deliberate this, but from a personal standpoint, I don't have any issues with the disclosures themselves, since they seem to be based on GASB 56. As far as the prior period and current period and the alleviation, I think that kind of might be a moot point. I guess I have to think about it further. If we always have this look forward period that we're recommending, then we're not as worried as if, did the government do a quick fix at year end just to alleviate it, just to be in the same issue 2 weeks later. If you're always having this assessment going forward, then I don't think those criteria are as impactful, because you're always doing the assessment going forward. Thanks.
Thank you. Zach?
So I mostly agree with the disclosures. In terms of subsequently speaking to kind of the status of fixing the issue, I've felt like maybe that was a little bit unusual, or I hadn't seen that in other types of disclosures, but given the severity of or the importance of the disclosure, I don't know that it necessarily bothered me. Really, the biggest heartburn that I had in the disclosures was having the preparers disclose the reasons and causes of the severe financial stress. I feel like a lot of times when you have these issues, there are a lot of different contributing factors that can get governments to a situation where they're having hardships. And I feel like that gives preparers a little bit of an opportunity to try to control the narrative and to try to explain it in such a way that kind of fits the narrative they're looking for. And so my preference would be to focus instead on the condition itself rather than the reasons and causes, and leave that to the users of the financial statements to contact whoever they need. If they want to figure that out, they can reach out to ask about it. But I don't know that in the financial statements, I feel like the reasons and causes should be there in the disclosure. I would say to focus on the condition. Thank you.
All right, thank you. That is everybody for question 7. So we'll see what other comments and questions we have on this one. I am not seeing any hands raised, so we'll move on to question number 8. We are now turning the corner to talk about probable dissolution. And so this is when probable dissolution disclosures are required. So paragraph 2 of chapter 5 of the preliminary views proposes that probable dissolution disclosures should be required if it is probable that the government will cease to exist as the same legally separate entity within 12 months of the date the financial statements are available to be issued. That requirement includes ceasing to exist because of a merger or acquisition. Severe financial stress may or may not be a reason for the probable dissolution. Relevant factors would be considered with examples provided in the guidance. So question 8 is, do you agree with the proposal for when probable dissolution disclosures would be required? Why or why not? For this one, we'll start with Bill.
Excuse me. Similar to the other comment about the date, I would prefer to see identified as the audit date versus probably date available to be released. I think that's a little bit more confusing and subjective. But other than that, that's my only comment.
Thank you. We're going to go up the alphabet this one. So Elizabeth.
I do agree with this for reasons stated in the PV.
Thank you. Heather?
So we agree with the proposed disclosures in the PV document for the reasons described in the PV document. We didn't take any exception to them. Thank you.
Bruce?
I would agree as well.
Alicia?
I agree as well. I don't have anything else to add. Thank you.
Zach?
I don't disagree. If I have any concern or any thought that entered my mind, it's is there a risk if you have just standard mergers and acquisitions in accordance with GASB 69, but that are not associated with severe financial stress or the financial issues, and then those are all aggregated and combined within things that are due to severe financial stress or financial issues. Is there a risk of kind of conflating those two in terms of how the reader needs to pay attention to those issues? Should they pay attention to them separately? Would be the only thing I would add on this discussion, but overall, no significant concerns.
Thank you. Tony?
The ASCPA disagrees with the scope of including mergers and acquisitions unrelated to SFS. We recommend limiting the probable dissolution disclosures only to cases where dissolution arises from SFS. Our concern is including mergers and acquisitions could create unnecessary complexity and overlap with subsequent event disclosures, which is where we feel these potential mergers and acquisitions unrelated to SFS could be reported under. Mergers and acquisitions unrelated to SFS could have confidentiality issues. There could be events that disrupt those planned mergers or acquisitions when they're outside of an SFS type of scenario. We recommend limiting the scope just to SFS related PDs.
All right, thank you. That is everyone for question 8. So we'll ask for any follow-up comments or questions from participants or board members. Joel?
Pose a question to Elizabeth again. You said this, I just wanted to be clear. You said for the reasons stated in the preliminary views, you agreed. And kind of to Tony's point, we heard that a fair amount, that sometimes it wasn't necessarily users, but auditors and preparers saying users don't really need the information. That's not exactly what Tony said, but we more paraphrasing generally. users don't really need the mergers and acquisitions. They really only care about probable dissolution that stems from severe financial stress. You said, and we said in our view, we thought users cared about even more broad probable dissolutions. Just if a government's going away or it's probable they're going away or ceasing to exist, we think users like bondholders might care about that entity going away to understand what's happening to my bonds, et cetera, et cetera. That was our view. Is that what you agreed with, or any
Yes.
elaboration?
Yeah, I agree with that.
Okay.
That may be my lawyer head, because I want to know about, well, and I will know, but yes, and bondholders will want to know about it, even if it continues as a substantially similar entity, they still want to know, because they're like, are they taking those steps that are necessary? Is this really going to happen? I think that is important to know.
Thank you.
Bill?
Yeah, a question for Tony. Is the concern with the mergers and acquisitions, because I would assume that isn't related to a general government. It's more to, say, like a hospital or something like that, that reports under government standards, that type of entity? Is that unfair?
It's not unfair. I think more than likely it's going to happen to a special purpose government. And I think, just to maybe follow up on my comments, is when there aren't those indicators you're assessing, and it's literally coming down to a negotiation, more of a business standpoint agreement to merge entities or to buy an entity, so to speak. I just feel like it's harder to make that assessment when you don't have a long list of indicators. You're just going off of what you're hearing through conversations of potential legal sides, or maybe not hearing anything because it's of confidentiality. So I think that assessment is a little bit more difficult.
Yeah, I mean, to that regard, I mean, I think it would be appropriate to limit the disclosure when you have not quite a private business entity, but one that operates in that fashion, not to put them at a disadvantage. But in the general government sense, it seems like it would make sense to let the stakeholders be aware of what's going on. But I don't know if there's any way to carve those pieces out. That would be reasonable.
Any other comments or questions related to question 8? I'm not seeing any, so we'll move on to the level of probable dissolution evaluation. So paragraph 20 of chapter 5 of the preliminary views proposes that the evaluation of probable dissolution be performed separately for the primary government and each blended component unit. The board believes that the evaluation should be made for each legally separate entity because probable dissolution is about ceasing to exist as the same legally separate entity. So question 9 is, do you agree with the proposed level at which probable dissolution would be evaluated? Why or why not? For this one, we'll start with Elizabeth.
Yes, I agree that it needs to be done at the primary government and each blended component union or discretely presented component union.
All right, thank you. We're going to go down the alphabet, which is really going back to the beginning of the alphabet this time. So Bill is next.
Yeah, I agree with this, and I think that's what Elizabeth just mentioned delineates from the SFS side of it. So I think, having an entity go away, if you will, versus an issue with resources.
Thank you. Tony?
Once again, our committees did not deliberate this issue. But personally, I think I alluded to it earlier. I think my only concern here is having this be at a different level than the SFS assessment. Obviously, in those instances where the blended component unit could be experiencing SFS and that potential level assessments not being done at that point, but then now it's going to be done at a PD level. Just wondering if there's going to be a disconnect there.
Thank you. Zach?
I don't have a strong position on this one. I do think ideally it would be nice if there was congruency between severe financial stress and probable dissolution evaluation. I think I understand why there's differences there, and so I would probably defer more to the user community in terms of is that relevant information? How is that relevant information they would use to be aware of those circumstances with blended component units?
Thank you. Alicia?
I agree as well on the reporting, evaluating separately. Evaluating it at a whole, it could really understate the risk. So I do agree. Thank you.
Thank you. Bruce?
Yeah, I would agree as well. I think that there's limited instances where the government as a whole becomes dissolved, and so it's most likely to be at one of the components within the government becomes dissolved, and so wanting to conduct that separately is probably the best way to go.
Thank you. Heather?
So we agree with evaluating it for the primary government and each blended component unit for the reasons that Bruce just mentioned. We do, I do want to repeat our concerns that we mentioned when we talked about SFS with the discretely presented component units in instances where they're not issuing separate financial statements.
All right, thank you. That is everyone for question 9. What other comments or questions do we want to talk about with this one? Elizabeth?
I just want to echo what Tony said, to have the equalization between SFF and probable dissolution. I don't see how you don't do SFF at just one level and then probable dissolution at separate ones. I think they need to be the same.
I am not seeing any other hands raised, so we'll move on to our last question. This is the probable dissolution disclosures. So Chapter 6 of the preliminary views proposes the content of those probable dissolution disclosures. These were also adopted from the current disclosures required in Statement 56 for going concern uncertainties. The disclosures would be a statement that dissolution is probable, the reasons and the causes for the probable dissolution, the government's evaluation of the significance of those reasons and causes, actions taken by the government in response to the probable dissolution, and information about the recoverability or classification of assets and liabilities. If probable dissolution disclosures were required in the prior period and are again required for the current period, the disclosures would be updated to the current reporting date. And if they were required in a prior period and not required for the current period, the government should disclose why the result of that evaluation is different. So question 10 is, do you agree with the proposed probable dissolution disclosures, including the requirements for subsequent periods? Why or why not? For this one, we're going to start with Tony.
I personally have no issues with the proposed disclosures. The committees did not deliberate this based on our broader concerns, or that's the last time you'll hear me say that. I do want to point out at this that we have begun conversations, and we being members of the ASB Going Concern Task Force, the Technical Issues Committee, and the expert panel have begun conversations with GASB staff to ensure that the AICPA and the GASB aligns, hopefully, on this project going forward the best we can, and to answer any of the questions and review the preliminary review proposals in more detail over the next few weeks. And we've begun those discussions already. So thank you.
All right, thank you. Moving up the alphabet, Bill.
I agree with the disclosures.
Thank you. Elizabeth?
I agree with him as well.
Thank you. Heather?
So we generally agreed with the disclosures, but we would like to ask for possibly two areas of clarification. So in chapter 6, paragraph 2C, and I have the same comment with SFS, we were not entirely sure what was meant by the government's evaluation of the significance and of the reasons and causes. So if there's could be any clarification on that. And 2E, information about the recoverability or classification of reported asset amounts or the amounts or classification of liabilities. Again, not entirely sure what is being asked for there. It appears to maybe involve prospective or projected information, which really wouldn't be necessarily auditable. And then I won't belabor the point, but we were also going to mention here that just some of the proposed disclosures don't neatly fit into situations, I don't think, where we have like a planned merger or acquisition. So don't have a solution for that, but again, just wanted to echo the concerns that others have already brought up with that. Thank you.
Thank you. Bruce?
I like the idea of the disclosures. From the academic side, a lot of the questions that we have about understanding and wanting to improve our understanding around solvency of government and the ability of governments to continue is predicated on our ability to understand the condition of the governments. And so, having the disclosures there definitely provides a nice way for us to be able to capture that under a consistent basis, to be able to improve the understandings that we have overall. So I definitely think it's a really good idea. I think you'll have probably some pushback from some states and some communities who don't like that that's disclosed, but I think that's always going to be the case, and it's probably the governments who are having the most trouble are the ones that don't want to have to publicly admit that.
Thank you. Alicia?
I agree as well. For the same reasons I stated with the SFS disclosures, for the same question is, the transparency piece of it provides a full picture for the community and the stakeholders involved. Thank you.
Thank you. Zach?
Consistent with the severe financial stress disclosures, no significant concerns with these disclosures other than the reasons and causes. Would prefer for that maybe not to be in the notes. To me, that seems more kind of subjective management analysis that might belong better in the MD&A. Otherwise, no further comments.
All right, thank you. That is everyone for question 10. So we'll once again ask for any comments or questions. I am not seeing any on this. Are there any other comments or questions on anything that we have talked about today that anyone wants to raise? All right. I will turn it back over to the chair to close us out.
Thanks, Deborah. So this was a great session. I can tell you, probably speak on behalf of the board, that it's very informative to hear all of you and your views and the discussion that you had. This, combined with the other two public forums that we've had, certainly gives us a lot more information and context, along with all the comment letters, to take into the deliberations or redeliberations as we move forward. So we really appreciate the 7 of you investing your time with us. This public forum format was kind of new for us. I think overall, the past 2 have been viewed as successful by participants. We'd love to get, the 7 of your feedback too, of as a participant, what did you think? But certainly it was beneficial to us. So thank you for agreeing to participate and for being here with us. Very helpful. And with that, I think we are right. One other thing though, that this is, kind of new. This is one other thing. We're just said we were ready to be done. We've done 3 of these now, and the team that, Deborah moderating, the team going through and getting all this prepared, and everybody from, Greta and everybody for organizing it. Thank you all. I think these were very successful public forums. So thank you all as a team for all you contributed to that too. So with that, I think we are done and can conclude the public forum, and the board meeting regularly scheduled. We'll start back up at 9 a.m. tomorrow. See everybody then. Thanks, everybody.
Thank you.
Thank you.
Thank you.